Hi everybody, it's Friday, August 1st, 2025. I thought I'd do the episode earlier today because I don't expect any major changes in what's going to happen over the weekend, and I'll explain basically right now with our first headline of the day, Tariff Tsunami trumped by historic jobs revision. Now, while the tariffs hitting the tape certainly does have an effect on markets and do cause the market to sell off a bit today, the last nail in the coffin is the payroll report. The worst of it, of course, buried as usual in the revisions of the BLS. You can see from the government website, bls.gov, the front page here, both payroll employment plus 73,000 and unemployment rate 4.2% change little in July. That doesn't sound so bad unless you open the report, which I have right here, and see that the change in the revisions, I'll just read it verbatim right here. Revisions for May and June were larger than normal. The change in total non-farm payroll employment for May was revised by 125,000 from 144,000 to 19,000. So we thought we gained 144,000 jobs in May, and actually today they're saying, actually, it was more like 19,000. That is a huge revision. And then not only May was a revision, it says, and the change for June was revised down by 133,000 from 147,000 to 14,000. It's amazing how far off they can be on the first report. And so when you see this headline over here saying 73,000, and right after two revisions downward of over 100,000 jobs, this could easily be revised negative in the near future. Don't forget the BLS, back in February of 2025, that they did another revision of minus 600,000 jobs for the year of 2024. I said there might be a rug pull today. Is it just a coincidence that we have a historic revision on the same day as the tariff tsunami hits? You tell me. Another way to see this on a chart, this is from CNBC. These blue bars are job creation numbers, and these two are the ones that were much, much higher, above 100,000, not looking so bad, revised down to these little eensy candles. And I'm wondering if these are even real or if they're actually negative. And then today's report being 73,000, not sure how much weight we can put into the BLS as far as their credibility goes. Markets thought the jobs data was better because the jobs data was better, and now it's a lot worse. I was joking around with you guys yesterday talking about Treasury Secretary Scott Bessent saying, don't panic everybody because the tariffs might not be on for only 3 days, 3 weeks, or 3 months. And I said, hey, that's basically saying, hey, we're going to save the stock market if it falls, but it's a little more nuanced than that, because the real goal that they want is the 10-year yield to drop. Why do they want that to drop? Because that means they can spend the money that they want to spend. When yields go down, it costs the government less money to borrow it. This is their plan. This is what they want. They're not going to save the stock market this time. I'm telling you, because they are getting what they want. Not only is the 10-year yield dropping, they also have the dollar dropping, which is also a big piece of this. They want a weaker dollar. Trump explicitly has repeatedly said an overvalued dollar hurts U.S. exporters. And so while in April we saw the 10-year Treasury note yield spiking before they said, oh no, we can't have these tariffs anymore, we got to hit the pause button. Today, the 10-year note yield dropped a lot. We opened on the day at 4.4%, and as I'm recording, we're at 4.25%. Ginormous red candle to the downside. And this coincides with the other thing that they want, which is the dollar to drop. And the dollar dropped today from an opening of around 100 to currently 98.94. So the reason I again feel like it's worth doing the episode earlier in the day is because I expect no changes for the rest of today or over the weekend. Because what would be the reason for saving the stock market? There is none. There is none right now. They're not going to do it this time. Moving on to our community topics, what moves did you make today and why? I had some UVXY calls that I bought yesterday expecting high volatility, and I'm selling those today, obviously, at between 300 and 500% profit. I'm planning right now to hold the rest of my bearish positions over the weekend, again, because I don't see anything changing now. I think the rug pull has started, and there's no reason for it to not continue. As always, thank you for watching, subscribing. Welcome all of my new subscribers. The subscription button is right here. You just put your mouse on it and click subscribe. I'm sure you won't regret it, keeping up with my show. Thank you for all of your comments and your support, especially those of you who have been supporting me for a long time now. My crystal ball says I will be needing to do updates in the daily reminders macro views, but I haven't made any updates to the website yet. My crystal ball readings remain basically the same. No, they are the same. The crystal ball ratings are currently playing out. I am expecting the S&P 500 to drop by at least 50% in this cycle, and no changes to the Robschild portfolio for today. Moving on to the rest of the charts, I mentioned yesterday, even if you just looked at the charts alone and didn't realize that today we had the employment data coming out, and you didn't know the tariffs were coming out, this red engulfing candle looked really bearish, and it's playing out that way. We're sitting on a negative 1.52% in the S&P 500 as I record. We were down more earlier. I am expecting actually more downside, especially from 3 p.m. to 4 p.m. today. The NASDAQ, the triple Qs, similar. We're down 1.8% right now after this very big engulfing red candle that actually did engulf officially the full candle of yesterday and the previous two candles at the very top of a chart. Super bearish. I talked about this yesterday, and it's playing out like clockwork. I do hold SQQQ. If you've been following the show, you know that I have that position, and I'm holding it. Big update on Bitcoin. The orange line that I've been talking about that connects the 2017 highs to the December 2024 high to the January 2025 high had been broken yesterday, and we closed below that line yesterday at 8 p.m. That's the closing time of this chart. Many people were wondering if Bitcoin would act as a safe haven in this environment since stocks are selling off. The question on people's minds was, is money going to pour into Bitcoin as a safety haven asset? It isn't so far. I am still short Bitcoin as well. I mentioned yesterday and the day before how amazed I was at credit spreads continuing to stay just obscenely tight, and I said just yesterday I don't think it'll last for long. You can watch the video, and that has been very correct so far. Credit spreads blowing out a little bit today. I expect this to continue. We also have a pop in the VIX marginally right now above that 20 level, and I expect this to continue higher for the moment. The way that I see it, the Fed and the Treasury and the government of the United States has no interest and no reason to currently save a highly overvalued stock market. I think that the bearishness will continue. The one thing that may stop it is if for some reason the 10-year note yield spikes the other way. If it starts going way up, right now it's spiking down. That's good for everything that they want. If it spikes up, then we will be in a different scenario. But as it stands, I highly expect this to continue. But what do I know? I'm just a guy with a crystal ball, and that's all from me and my crystal ball. I hope you enjoyed. Thank you for watching, and see you next time. Robschild.